All right, that's about JV Chemicals. But the other interesting conversation that we had today was with Tega Industries. So let's talk about a special segment, Insight Edge, where we give you an edge over the insight that the management spoke to us here on CNBC-TV18. And Vahishta is focusing on Tega Industries itself. Vahishta.
Hi, Mangalam. Thanks for that. Let me brief a little bit to our viewers about the basics of the company. It's a 4,000 crore market cap company with 86% revenue contribution coming in from exports. The company caters to the global mineral mining and bulk solids handling industry. Like you said, the management did join us today morning, and they've said that they're completely insulated from all capex cycles or global slowdowns. So that's a positive. Next, the Dyna Prime business, which is the key growth driver to their business, is expected to contribute 27-28% of overall revenues from 24%, which is at present. Q2 and Q3, as we know, has seen a correction in the raw material prices, and the logistics and freight costs have also come down, and hence they expect their FY23 margins to be boosted. FY23 gross margins are expected in the range of 59 to 60%, while EBITDA margins are expected to come in at 21-23% from 19% in FY22. So there's an improvement over there as well. Now, being an export-oriented business, the collections generally happen after the products are delivered to the customers. So working capital days are expected to improve to 130-135 days, including the shipping time, from the current, which is 143 days. So that's also another positive. The current market share of the company is at 5% in the global mill liner market, which will improve to 6 to 6.5% by FY24. And the global mill liner market has an opportunity size of $1 billion. Also, the mill liner product business contribution is at 75% now, which is expected to go to 80% in the near future. But the company is comfortable to maintain the ratio at 70%. And post the capex completion, the company targets a revenue of 1,900 crores by FY26. The stock has rallied quite a bit in the past. In fact, in the past 1 month, it's up already 8%, but in the past 1 year, it's been nearly flat. Back to you.
Okay, thanks a lot for that. In fact, we had a chance to speak to the management. Let's listen in to what they had to say.
We've always maintained that our gross margins are going to be around 59 to 60%, by the end of the year. In the first quarter, we did see some pressure because of the logistic costs still continuing to remain up. But over the subsequent, I think, Q2, we've seen those margins improve because of reduction in costs that have come through. And in the subsequent 2 quarters also, we see that continue to pass through. So yeah, I mean, if the trend continues the way it is as we see today, we do see margin expansion happening for the rest of the year. We maintain the guidance of about 21 to 22% for the rest of the year, to end the year around that level. We'll see our Dyna Prime contributing close to about 27 to 28% over in terms of our overall revenue. We see that pretty much a healthy uptake in Dyna Prime. It's seeing a lot of traction globally. So in terms of market share, I mean, when we last, we just completed our anniversary of our IPO yesterday. So we were at about 5% at that time, and I think we will end up by FY24 between 6 to 6.5% in terms of market share. As you know, it's almost $1 billion market. So we'll be adding almost about 100 million in Dyna Prime sales by FY24 to really look at the market share.
All right, let's keep it stock specific then. The other stock which is buzzing around in today's trading session is SBI Life on the back of a bullish brokerage note coming in. Surabhi joins in with the details.